Hello guys, so this is the top down analysis for the week, and we have the dollar because we are going to be looking at the dollar, as the dollar is the opposite of the other foreign currencies like GU and EU. So let's start from the monthly time frame, and the monthly time frame has been bearish for quite some time because we see price has been held by this breaker block. However, the breaker block is not my concern because I want to show you something. The price moved from internal to external and external to internal because we have this internal range liquidity and also this internal range liquidity. But price is likely not to come into this internal range liquidity without taking this low. So our draw on liquidity is this low, and our short-term draw on liquidity is our concern. We don't care about this for now because we are a day trader, and I want to see price taking out this low first. But here we see this old high has been taken by this, which gives us what we call sweep of liquidity. And if we compare it with other currencies like GU and EU, we have an SMT divergence, which is a confirmation of a bearish trend. Now we also have price. When price created this swing high, it's formed by closing within this range, and this gives us a confirmation that price is going to sell. And what we'll be looking within this candle 2 range is the change in the state of delivery and also fair value gap, as well as if price should enter into this range, we'll be looking at SMT divergence to continue bearish. So now let's go to the weekly time frame. What do you have on the weekly time frame? Here we see price. When price take out this swing high, it left us with what we call change in the state of delivery. And this is the change in the state of delivery here. We see price has closed below this bullish candle. That gives us another block or change in the state of delivery. And we have a fair value gap. So last week, we see price coming into this fair value gap. And when price entered into the fair value gap, we should be looking at how the candles react at the fair value gap and also how price is likely to form swing points. Now we see price entered into the fair value gap without giving us this kind of swing point. Do you see this kind of swing point? We have candle 1, candle 2, and candle 3, and candle 2 closed within the range of candle 1. Do you see? It closes within the range of candle 1. But here we see this swing point. We have candle 1, candle 2, and candle 3, and we see candle 2 did not close within the range of candle 1. However, with the bearish move last week, we see price has closed below candle 2. So we know that price is what? Price is bearish and is heavily bearish with a strong expansion. So what do we need to do here is to mark the previous week candle, and we're going to be marking the 50% because price is bearish. Remember, we are targeting this draw on liquidity here. Price is bearish. We are targeting the 50% level, which will serve as our area of interest. We want to be selling at this level. However, price can move slightly above and then continue above 50%, but we don't want to see it at this level. If price should come to this level here, price should be taking out this high. So I'm comfortable selling at this level, below or slightly above the 50%. So when you mark this like this, targeting this draw on liquidity, you should go to the daily time frame and look out for fair value gaps. Here we see we have a fair value gap above here, but this fair value gap is too far for us to for this draw on liquidity. So what I'm looking at is that since there's no fair value gap formation here, until Monday, we should be able to see a fair value gap formation. If Monday we have a fair value gap formation, then we'll have what we call Monday as what, manipulation or consolidation. Then we see Tuesday, Monday giving us a range, which we create the fair value gap, and then we will see a manipulation on Tuesday and then sell off. That will give us Tuesday high formation. That means Tuesday we create the high of the week, high of the week. But however, right now we see no fair value gap, so we will not do anything tomorrow, Monday. However, for the trade on Monday, we can use the same concept on the daily time frame. What do we need to do is to mark the 50% of the daily time frame. If you look at this, is the 50% of the daily candle on the daily time frame. So here we see now we have a range, and we're expecting to see our trade within the 50% or slightly above for us to continue our sell. So if we go to the 4 hours time frame, we should be able to see the fair value gap, and then we have our fair value gap, guys. So here, this will be our what? Our fair value gap. So we'll be looking at this fair value gap, and what are we be going to looking at in the fair value gap? We'll be looking at SMT divergence within the fair value gaps, and also we'll be looking at candle formation, how candle is being formed. So I'm going to do another video when price play out within the week. I'm show you how I confirm my direction. But now the area of interest we have here, we have this as the area of interest in the market. This is the area of interest. This is this area of interest to sell in the market. So we'll have this. We want to see price selling from this level. This will be our area of interest. So in essence, we want to see price going bullish before going bearish, or we see price going slightly bearish here and then continue to this point of interest here at this level. So guys, this is what I have on the dollar index. So when we go to the euro, and then if you start on the monthly time frame on the euro chart, we will have something like this. So on the monthly, we will have something like this. Let me remove this markup. So here we see price has failed to make what? To make lower low, and that gives us an SMT divergence. Remember what I said? You have to rewatch the video again if you're confused. And before I continue, you can like, share, and comment any question you have on the comment section. I'm going to respond. So we see price failing to enter into this fair value gap, and also as well as this fair value gap. Remember, I said near term. We're looking at this as our near term draw on liquidity. So price is going to be bullish, and when we go to the weekly time frame, we see price gives us here an SMT. Remember, here it's making lower low, and on the dollar, let me go to the dollar. The dollar is giving us what we call lower high. That is an SMT. It's an indication that price is going to be bearish. And SMT is used for confirmation, just like indicator. So it has confirmed that price is going to be bullish. And we have what we call the change in the state of delivery. So next week, we want to see price either expecting this change in the state of delivery and continue bullish, or we can use the same concept by marking the range and identifying the upper half, which will, because price is bullish and the upper half is here, we want to see price respecting this upper half, and if we go one time frame below, we should be able to see a fair value gap, and there's no fair value gap. But since it is a daily time frame, we can use the same method on the daily time frame by marking the candle range on the daily time frame and also marking the upper half because we're bullish, and then this is the upper half. So want to see fair value gap, and on the daily time frame you go to 4 hours time frame to look for the fair value gap. So tomorrow I want to see price going here and then going bullish. So I want to see price moving here because on the 4 hours we have a fair value gap here. So this is the fair value gap, and here is the fair value gap on the 4 hours. So I can remove this. I can remove this for us to see it clearly. So here I want to see price coming here and then going bullish. So here I want to see price going bullish here. So here, this will be our area of interest tomorrow. And within the week, area of interest, we want to be seeing sell here, sorry, buy to this level. So I have not explained entry confirmation, but I'm also focusing on area of interest, guys. Let us go to the GU. Oh, I'm going to left GU for you guys to do it. Oh, okay, I've already analyzed the GU and you see this is the fair value gap. So guys, this is what I have on top-down analysis. If you have questions, please put it on the chat box, and also like, share so that more people can see this video. This is the only way you can support me. Thank you very much, and bye.